All right, everybody. Welcome to the session here. We have Mark Putrino, former hedge fund manager, traded with Steve Cohen, Mario Gabelli. If you don't know who those guys are, they are multi-billionaires, 25 billion, 34 billion plus assets under management. These guys are legends. Mark Putrino was lucky enough to be able to trade with these individuals, and you guys are lucky enough to be here and watch and learn from this guy. So let's go ahead and bring him on now. Let's give him a proper introduction. Just know we're going to be here for about 1 hour, an hour 30 around there. And you're going to get a sneak peek of what Mark Putrino does for his students, learn a little bit about him trading and what's going on and how you can profit from these markets. So Lacknell Lucero is ready. Let me know in the chat if you guys are ready. A couple shout outs to Bill, Mr. Bob Johnson, Doug is in the house, Jesse, Nifty, Renee, Wallcraft. All right, folks. We have Mark Putrino in the house. Let's give him a proper introduction. Let's go.
Damn, son, where'd you find this?
All right. What's going on, man?
How are you?
You like that intro?
Yeah, cool.
So we have people here from all over the world watching, and they're here to learn. They're here to make money, and a lot of folks here are definitely interested and want to get to know a little bit about you also, Mark, because you have some pretty intense experience in the Wall Street world. So before we do get that, I just want to get a sense of how about people here. So if you have been here before, if you've watched any of the sessions before, if this is your first time watching this, put a 1 in the chat. If you've already seen this before, put a 2 in the chat. That way we'll know where to take the conversation and go from there. And in the meantime, Mark, if you don't mind, can you give us a brief introduction here as far as like your, experience in Wall Street?
Yeah, well, I've had a pretty fortunate career, and it all started back in the late 90s when I was in business school. I met Mario Gabelli, who's probably one of the smartest people I've ever known. And he's a well-known investor, was a mutual fund king back in the 80s. So I was fortunate enough for him to hire me, and I spent about 2 years working there as a market maker on his broker-dealer desk. So Mario is mainly known for managing money, but he also has a broker. So I started my career as a market maker for about 2 years. Then from there, for economic reasons, as they say, I went over to work for Stevie Cohen, who is one of the greatest traders of all time. Gabelli's more of an investor, meaning buy and hold for long term. Cohen is, at least when I was working with him, he has multiple strategies, but I worked directly for him. And he was essentially a day trader, just threw around a lot of capital. I traded over the counter stocks for him. So I'd be buying and selling millions of shares of Intel and Microsoft all through the course of the day. It's like buy 1 million in Intel, an hour later, sell the 1 million Intel, an hour later, buy it back, sell it. So I had some great experience working for them. And at SJC, I really learned 2 important lessons. And one was how to understand charting, and the other was how to understand how important market psychology is and investment psychology. So then from there, I left there to become a head of trading at a hedge fund, an institutional money manager down in New York City that had multiple products. So when you have an institutional money managers have different products. They might have a mutual fund, they might have a hedge fund, they might have an institutional money management fund. So I've overseen the trading on a lot of different strategies. I've overseen the trading on probably about, maybe 12 or 15 different hedge funds. Because like at this place where I was working, which unfortunately the man who owned it passed away and the firm isn't in existence anymore, but it was called Lombardi Capital Partners. There was various strategies that I've overseen. From there, they shut down there was a big West Coast, East Coast rivalry, and the West Coast won, the partner on the West Coast won. So they shut the New York office. So at that point, my daughters had just been born. I have twins. So it wasn't up for I didn't make the move out to California. And I got a job working at a startup hedge fund in Connecticut. So I spent some time there for about 4 years. And then the performance there got bad and they started to lose money. So I made a move over to another hedge fund, or I should say institutional money manager. People say hedge fund so much, but it's really institutional money managers, and a hedge fund is a product of what an institutional money manager has. So I'll explain that in a little bit more detail. And then I was there, and then the place got taken over, and I didn't like the two guys that took the place over. They didn't know what they were doing, and frankly, they ran the place into the ground. So I left before that happened, and I spent some time kind of bouncing around trying to figure out what I wanted to do. And the institutional money management world is not a fun world anymore because everything is done, well, not everything, but so much is done electronically. So I decided to make the move to education. One day I was looking at some newsletters on the net, and I saw some, quote unquote guru talk about how his recommendation had doubled in the past week. So sure enough, I checked it out. And it turns out that this recommendation went from 1 cent to 2 cents. So in every stock, there's a bid and an offer. The bid is the highest price anyone's willing you to pay at the given time. The offer is the lowest price anyone is willing to sell at the time. So if someone sells 100 shares, they're going to get 1 cent. If they come back into the market and buy 100 shares, they're going to get 2 cents. So technically the price is double, but the stock hasn't even moved. So I just thought there would be a real need or market or whatever you want to call it, desire for people with my experience, because there's a lot of mythology about how Wall Street really works. There's like stuff that I, frankly, now that I'm in the kind of talking to the retail traders, like some of the things people believe about hedge funds and market making is just
there's
so
definitely
wrong.
a lot out there. So, all right, so let's move past this now. I just wanted everybody to get a sense of your background. Go ahead and share your screen, Mark. We have a ton of people here that are watching this for the first time. And folks, the more people let us know if you're new to this or not, the better the content is going to be for you. So make sure to, put that there in the chat. We got like 30, but we got hundreds of people watching. So if the chat's not working, let me know. So Mark, share your screen there. And I know you do a lot in the trading school. You have a background that is impressive. Let's talk a little bit about what you do in the trading school, how you're able to profit from what's happening, and how all of this ties back to your lessons.
Well, let me begin by saying this. A lot of people in the retail trading world think that the great money managers have these secret systems and secret styles and, these complex methods that they use. And the best traders really don't. The best traders, and when I talk about trader, I mean like a day trader or a swing trader. Most of our students are shorter term traders, and most of them trade options. So we have a lot of interest in options. But these people don't have these secret formulas or methods. They recognize basic principles of the market. And that is, what are the important price levels? What's the momentum and trends doing? And risk management and psychology. So just by paying attention to those things, you can figure out a way to make a profitable strategy that fits your style. So I'm just going to do a little thing here where I just want to show you guys. Let's see here. Is this the right one? I do a newsletter every week, and it has some trading ideas in it, and it has some ideas about the market. So I figured this would be a good one to show because we're talking about we're talking about energy this week. Okay. So the newsletter, I do a little bit of satire, but we point out which price levels are important. And as you can see, you'll notice that certain price levels is really kind of what drives the market. So let me just show you an interesting thing here. And just to show you how it doesn't need to be complicated. So this here is, where is it? Down here. So this is from October 10th. And I do a little bit of satire. I did a little bit of talking about what happened in the 70s with oil. But just check this out, just to show you how it doesn't really need to be that complicated. So this is the real estate sector fund, all right? And one of our lessons is on levels. Certain price levels are more important than other. Sometimes we know why, and sometimes we don't. And there's also something called market memory, which means these levels can stay intact for a long time. So way back in 2020, the 3380 level was support for this ETF, XLRE. All right. So I put here, there's a good chance that there is a meaningful rebound. Now, I'm not looking at anything special or secret, or I don't have a secret formula. I'm not using artificial intelligence or anything like that. I just saw a stock is approaching a level of importance. Well, in this case, an ETF is approaching a level of importance, and it's oversold. And stocks that get to some important support levels that are oversold tend to rebound. So now let's take a look at what's happened to XLRE since then. Okay, so this is where we wrote the newsletter, was right around here, and the thing has skyrocketed. And it wasn't just because, there's interest rates, this, that, and the other thing. As traders, we ultimately kind of try to ignore the news and let the market tell us what to do. So right here, actually, there's another lesson about markets that we can see here. When we're looking for price levels to buy or sell, we look into the past. And levels that were important in the past tend to become important in the present if the stock or the ETF retreats to it. So this level around 3880 was resistance. And then notice how it turned into support. And today it was resistance. And that's not a coincidence. The reason why a level can switch from resistance to support all the time. And if you can understand that concept, it makes it much easier to figure out where your entry points are going to be, where your exit points are going to be. You're not going to just be guessing. Most of the people that come to the trading school, when me and Rodrigo ask them why they're losing money or why they've lost money, it's because they guessed. For some reason, there's this strange thing going on where people think like, oh, you got to be an auto mechanic, you got to go to auto school, or auto mechanic school. You want to be a dentist, you got to go to dentist school. Well, you can just show up at the stock market with a lot of money one day or show up at the stock market and make a lot of money, but it requires a little bit of education. And just at the trading school, we keep it simple. And we just, like I said, we just focus on these basic market principles. Now, notice how resistance became support. That seems a little amazing. Why did this level that was resistance, meaning there were a lot of sellers there back in February of 21, turn into support in June of 22? Well, the traditional answer for this is seller's remorse. People sold, and when the market went higher, they regret selling, and they tell themselves, hey, I'm going to buy this thing back, but I don't want to pay more than I sold it for. So They place their buy orders at the same level they sold at. So resistance converted into support. Now we have the opposite, and it's not a coincidence that this is where XLRE stalled out today. It was support, and now it becomes resistance. So in the institutional trading world, this is what we look at. We're not looking at Gann theory or Elliott waves or all this other crazy mumbo jumbo stuff. We're looking at the basic principles, levels, trends, momentum. So support turns into resistance because of the opposite. It's buyer's remorse. So support.
And speaking of buyer's remorse, you do have a class that is called investment psychology, right? So why do you think that's important? And why do you think it's important for new traders and for people that maybe are intermediate or, a little bit in between?
Investment psychology is really kind of the most important thing. And I'll tell you, when people ask me what are the most important things about trading, this is why we have our investment psychology class. This right here shows investment psychology. Seller's remorse. Now we have buyer's remorse. People bought, and when it went lower, a lot of the people that bought decide that they want out. They think they made a mistake, so they place their sell orders at the same level they bought at. So psychology is what turns a support level into a resistance level, or vice versa. When we look at the market, you have to understand we're not, it's not a chess game. A lot of people think, oh, the stock markets are like chess and I could come up with some great formula or secret method and I can outsmart it. And that's not the way it works. Okay. 5 years ago, all these artificial intelligence funds became very trendy and were in vogue, and their performance has actually been pretty bad because they're based on statistics and probability, and statistics and probability theory assume people are rational and people are not rational. All right. Does today's interest rate thing really justify a move this high? Actually, I would say no, because if this is the real estate sector, these guys make money off of income, right? Off of people invest in this sector are looking for income. If interest rates are moving higher and if there's inflation, well, then this becomes less attractive. And that's why we had the sell-off. But I just wanted to show you that it doesn't really need to be that complicated. A lot of people really overthink it. And I want to show you something else that I think would be very telling and educational, okay? And it's the whole concept of having, if you want to build a trading model, there's certain things that you need, all right? You need what we call a setup, you need what we call a trigger, and you need an exit strategy. So the two most important things I think about trading are, you have to understand that people did not evolve in a way that is conducive to trading. If they're going to lose money, they feel fear, and fear makes people do dumb things. It makes them make emotional decisions. And not just in trading, in any aspect of life. If you make an emotional decision, the odds are it might not be that good. So 30,000 years ago, fear was a good instinct, because if you were being chased by a woolly mammoth or something, fear would make you run faster. But now people fear losing money. So we have to understand that. And the most important thing that you can use to get around that is having a well-defined exit strategy. Knowing how to get out of a position is even more important than kind of knowing what to buy. So this is a trade recommendation I made back on, I guess it was, October 24th or October 25th. And I said, if this stock, Dominion Energy, which was massively oversold, this is momentum. We talk about trends, levels, and momentum. Oversold means something is trading well below what would be its usual or typical trading range, and that draws buyers into the market. So I said, if we get back above this 65 level, there's a good chance we make a run up to 73, which was a support level. And as we've just seen, support can turn into resistance. So a lot of the students got in, and some of them, Rodrigo, are buying options, some of them are buying the stock, but the stock started to run. Now, I guess I should preface this with what one of our students said yesterday. They met someone who said that they put $20,000 into crypto and their portfolio got up to $200,000, and the person said now they're wiped out. So this is what one of the students said about one of their friends or someone they met. That poor person that lost their $200,000 profit didn't have a good exit strategy. So here is our setup. This is the get ready, get set. We're breaking above support. Here is our target. If it gets up to here, then we're going to sell it. Here is what we call a trailing stop. Okay, this is probably one of the most important things you can have, because this sounds a little counterintuitive to some of you people, but trading is not about being right. It's about making money. And a lot of people get too caught up with hoping things get to their price level, this, that, or the other thing. But we, as trading students, we're students of the market. We're not, trading ninjas. We're not gurus. We're not champions. I teach my class as we are students of the market. We let the market tell us what to do, because I'm wrong, you're wrong, everyone could be wrong. No one that I've ever met in my career knows where the market is going. The reason why they make money is because they follow the rules. So the entry was at 66, and then we started to see an uptrend. And the stop out rule was, hey, if this thing comes back down and breaks this trend line, we're going to sell it. So this turned into a buy at 66. and a sell around 69. So it didn't get to our target, but the market, by breaking this uptrend, told us that it was going lower, or there was a good chance that it was going lower. So a lot of people think that successful traders have these great plans, and I guess maybe some of them do, but my experience has been that the best traders let the market tell them what to do. You don't come into work every day with like this preset notion, oh, today I'm going to do this, today I'm going to do that. You look for certain things. And one of the things that we do in the trading class to look for trading ideas or trading themes is we go through the various sectors. And if we see a sector that's overbought or oversold or at support or resistance or an important level, then we maybe focus on some of the stocks in the sector. And people say, well, Mark, I'm a short-term trader. I'm a day trader. How far back do I need to look? And the answer is as far back as it takes, because even if you're a short-term trader, a long-term resistance level or support level might come into play. Now, if this rallies back a little bit, I suspect that there's going to be some resistance at 65 because it's an important level. So if there's one thing you take away, I mean, obviously, I hope you join the trading school because I think you're going to really enjoy it. But if you don't, the one thing to take away is make sure you have a clear exit strategy. It's almost like, if you go into a restaurant, you want to see where the fire exits are in case the place catches on fire.
That makes absolute sense. So PDX, he's a student from the school. He's saying, Mark, please don't give away all of our class secrets. PDX, don't worry. But I can't control. Mark has his own thing, So Imala, okay, so we're getting a couple of questions here. Folks, I just want this to be very, very clear. It doesn't matter what you're trading. You could be trading options, crypto, commodities, equities. You could be trading Forex. But if you don't know how to read a chart, and this is the easiest part to overlook, and everybody just wants to jump ahead and get started. But I mean, look at it this way. If you skip all of middle school and then you just want to jump to senior year, do advanced trigonometry, you're not going to know really what's going on. And the worst feeling is to lose money. And the worst feeling after that is to not even know why you even lost money. So even if you're trading options, crypto, it doesn't matter. This is the foundation. Like when you build a building, if you have a weak foundation, it's going to be a shaky building. But Mark, you do have option traders there. This is for everybody out there, right? It's not just for people that trade stocks, right?
We have people that are old, we have people that are young, we have people that are newbies, we have people that have been trading a long time and they just have lost a lot of money. Like I can't even tell you when the class started how many people said the reason why I joined the class is because I lost so much money in the crypto market. And ironically enough, here we are a year later and that's happening again. But the reason why people lose money is because they overthink things, or they try to use some secret strategy, or they guess, or they get the idea from some chat room. And what I want to do in the trading school is teach people how to develop their own trading styles or methods, because everyone has a different personality. And what works for one person may not work for the other person. So that's why I'm not so keen on these like, oh, watch how I trade, watch what I do. Everyone's got a different personality. I mean, some people are high energy and they like watching the markets every day, and that's a good personality for a day trader. Other people maybe are more kind of chill and like to think things out, and they're maybe more of a long-term investor. They like to look at balance sheets and income statements. And our class is mostly technical analysis, but we look at other things too. We do look at earning statements of important companies, of bellwether companies. We look at margins, or if a company like Walmart comes out, we'll take a look at their earnings. Like this whole thing with the retailers all selling off, we kind of saw that back in January and February because we looked at, I forget which retailer it was, Home Depot or maybe a couple of them, and we saw on their balance sheets this inventory build. And when a retailer is building inventory, it means that they're selling less things. But I just want to show you here. Oh wait, that was the real estate thing I was just showing you. So I do, a little bit of satire, and I put a trading lesson in each of these. So every week you would get a trading lesson. And let me see if it is in this one here. Yeah. So this is a lesson, a trading lesson that came out of this oil thing. So I think it's important if you're a trader to understand history, because markets don't change. I mean, well, the technology changes, the names change, but human nature doesn't change. So in this weekly newsletter, I kind of just like to do a little bit of a satirical thing about history, because I'm a huge history buff, as you can tell by all the books behind me. Those are all history books, and I'm actually in my library surrounded by history books. But so anyway, this is Nixon, stagflation. Because of the oil embargo back then, oil went from literally like $2 a barrel to up to $30 a barrel by 1980. But in these years, it went up from 2 to 12. So I like to use a little bit of humor, because I guess I'm kind of a satirical, cynical person. But there's a trading lesson, and right here is a trading lesson on JP Morgan. And this shows a really good example of what we were talking about, how levels can change. Support becomes resistance, support becomes resistance, support becomes resistance, support becomes resistance. So how does this help you make money? Well, if something is at support and it reverses, you buy it. And if it gets up to a level that had previously been a support level, there's a good chance there's going to be resistance there. So that's where you sell it. So we have a lot of successful traders that are making a lot of money. And I think one of the epiphanies, or is that a right word, epiphany, or realizations that people have, is that, gee, I never realized that it didn't need to be so complicated. It doesn't need to be.
Oh yeah, dude. There's the reason, dude. It's just like there's so many of these like marketing gurus out there, and it's really easy as a new trader to fall into that trap. So so this is a question from OSV. Does the trading does the trading school teach any quant strategies, logistic regression models, random forest? Mark, what do you even think about quant strategies?
We don't really get into that, because that's more of, I mean, if someone has a question about how to do that, I would certainly help them. And in a lot of ways, yeah, we do build trading models, but it depends what you mean by quantitative, right? When I think a quantitative model, it's a model that has dozens and dozens of parameters. But a trading model for this type of trade, generally quantitative traders are longer term, and most of our students are shorter term, but I do know a lot about quantitative trading. So if anyone ever has a question about it, I can completely, tell them, I can help them with the answer. But we're not really building quantitative models. We're doing simple things. Now, let me just show you something here that's kind of pretty simple. That could be a simple model. The problem, or I think one of the issues a lot of people have with trading, is that they put all these different charts and stuff on their, they put all these different indicators and things on their charts, but they don't really understand how to use them. So I'm just going to bring this up because this is a good example. This is the Consumer Staples ETF. XLP is the symbol. And these indicators, all right, are the tool. It's like the indicator is an instrument. And if you look at your trading indicators, right, you see all these different tools. I see a lot of new traders, they just have a lot of stuff on their charts, but they don't really know what it is. And they don't really know what to do with it, because this is a tool. A trading model is built on rules. So there's a difference between a rule and a tool. If you have one of these, this could be a very simple system here, and you can see how effective it was. These red lines are what are called Bollinger Bands, and they are, the default setting is the red one on the top is 2 standard deviations above the moving average, the 20-day moving average, and the one on the bottom is 20 days, or I'm sorry, it's 2 standard deviations below the 20-day moving average. So a rule, this is the tool. Bollinger Bands are the tool. The rule could be when we get outside of the Bollinger Band and then close back within it, that's your sell signal. The tool is the Bollinger Band. The rule is what you do with it. How do you utilize this knowledge? So this would have been a sell, or if you bought puts. We didn't close back within in here. We closed back in here, so this would have been a buy. And if you had a good risk management strategy in place, or a good trailing stop, you probably would have gone out here for a profit. It gets back down here. Notice it gets below the Bollinger Band, closes back above it. That's your rule. I'm going to buy when it gets back into the range. 95% of all trading should happen within 2 standard deviations of the mean. So when something gets more than 2 standard deviations from the mean, it's when it exceeds that threshold, it gets the attention of all these algorithmic trading models that are based on statistics. So
right. Mark, what do you say to new traders that maybe they overlook technicals, they overlook understanding the charts, they just want to get in out there, and they're just, they just get too excited to trade, and they just like, I'll figure it out, I'll wing it. Like, do you think this is the market in a recession with geopolitics? Is this the time to wing it?
I think if you're just going to wing it, you're probably better off giving your money to charity, because you're going to lose it. So instead of losing it to someone on the other side of a trade who kind of knows what they're doing, if you just wing it, you're going to lose. Think about it like this, right? A chart is like a map. And say you were in a town you had never been in before, and you didn't have GPS and you didn't have a map. Well, you're not going to know where to go. The charts are kind of the map of the market. They tell us which levels are important. They tell us whether things are overbought or oversold. A lot of people say, chart readers are just like, it's like reading tea leaves, or it's astrology. And for a lot of people it is, because they don't really know what they're doing. And I've seen a lot of people, even people that are well known that you might see in the financial media, they don't know what they're doing. It seems like a lot of people just pick up an idea and they regurgitate it. So that's one of the things I really kind of like to focus the class on, is to ignore the news, right? I mean, sometimes there's important news, like if there's going to be a rate hike or something, but 95% of the time, if you put on CNBC and they talk about why the market is moving, they always have to try to attribute it to some kind of fundamental reason. And that's not the case. I mean, most of the time, markets, if a market makes a big move, it's because it's oversold and it starts to come in, or it breaks a resistance level and it starts to go up. It's not. When I was at my last trading job, we kind of had this joke about the Turkish lira, because one day the market was like, I don't know, it was down like 0.5%. It was like nothing. And we put on CNBC and they're all going off about how like, the market's down because of the Turkish lira. What's going on with the Turkish lira, right? So, I mean, I hope I'm not offending anyone who's from Turkey and the Turkish lira, because I'm not. I'm really offending CNBC. But so it became kind of this joke on the trading desk. Like, why is this down? Oh, it's the Turkish lira. Or why is this up? Oh, it's the Turkish lira. So
yeah, right.
That's why we try to cut out all the noise. If I was on a desert island and I didn't have access to the news, but I had access to my charts, I don't think my trading style would be that different. Now, let me just give you a little trading idea here that some of the students are
really quick here, Mark. Before we do get into this trade idea, which I mean, I know the oil. We're going to talk about the oil call that you made, the historical oil call that you made. But we have a couple of questions. We have hundreds of viewers here from all over the world. Let's just get over these questions, and then we'll get back into the session. All right.
Okay.
So, okay. And by the way, thanks a lot for sending these. These are questions from the viewers. So let me just pull them up here. So does the trading school include Benzinga Pro? Yes, it does include Benzinga Pro. That's our proprietary research terminal where you can pull up stocks, watch list, a lot of stuff. We're going to talk about it later at the end a little bit. Good question. Does everybody that joined get a laptop? Yes, we are hooking it up. You will get a laptop if you join. It has to be before midnight. What is see this question? Is this for new traders only? No, we do have advanced traders there, intermediate. keep in mind the learning is great, but you're talking to a former hedge fund manager that traded with the best. Steve Cohen, Mario Gabelli. Gabelli was Investor of the Year 2011. And Cohen, if you don't know him, you should look him up. They're both multi-billionaires. Next question. Is there a money back guarantee? Yes, there's 30 days of 30-day money back guarantee. So you could try it out, test it out, see if it's for you. If not, full money back. There's no fine print, nothing like that. Let's see, Jekram, it's only annual unless you would like to do some sort of lifetime. Is Mark going to be the teacher of every class? Yes, this is Mark Putrino's school. He built it. He developed it. He is the content. He is the school. So Mark Putrino, if you're a trader and you join this, you're going to be talking to a heavy hitter, somebody that's traded pension funds, like big amounts of cash. So, okay, let's go here into the next question. What is the price at renewal next year? It's going to be the same as today, 70% off. It's not going to change. That's always going to be the same. And let's see, next question. Do you only trade stocks? No, we do have option traders there. Like I said, we have crypto traders. We have people from all different industries Mark, and maybe you can touch on this a little bit, right? Like we do have like users that are from all over the world, and even people that work in different places. Like we have somebody that works at UPS and FedEx, and I signed up somebody today that works at the Department of Defense, and he's joining. He's part of it. So there's a lot of people here that have a lot of knowledge. There's another doctor that I signed up that works with a lot of biotech companies. Like we have a pretty interesting crowd in the school, right, Mark?
Yeah, and that's one of the things that's really cool. Now, I'll just be perfectly honest. When I first started this trading school, or when Rodrigo and I should say, first started this trading school last year or last September, I have never been in the retail trading world. My background is in the institutional world. I kind of just assumed I would kind of go up and give a lecture every day and people would take notes and, blah, blah, blah. I didn't realize on how important the community would be to people. And a lot of the students they have study groups, they talk to each other. Some of them are planning on going on an ice fishing trip together up in Minnesota where one of them lives. And because we have so many people from so many different places, I always like to ask people two questions when they join, and they don't need to answer. Listen, you could be completely involved in the chat and talk to other people, or you could just stay on the sidelines, whatever works for you. But we have students that are farmers, so that helps us get insight into farming. What's going on with wheat prices, what's going on with soy prices. We have students that are truck drivers. They can help us out with what's going on in trucking. So it's the community has made things a lot better. And the community has really added value that I never kind of foresaw. For example, one of our students who lives in Louisiana was saying how the Mississippi River is so low that barge traffic can't get through right now. And you don't hear anyone talking about that on the news. So we might get stuff before it gets out into the general public, we can hear the trends from what's going on. Like today, right. We were talking to people about some of the people that are in the students that are union members. We're talking about, is this rail strike going to happen? And what could that do to the economy? So they pushed the date back to December 4th. But the community, I think, is great. And when we went out to Vegas, when we had our conference in Vegas, a lot of the students came literally from all over the world. Like TK came, I don't know if he's here today, but came in from Germany. And one of the things that really kind of struck me and made me kind of feel really proud is that there's so many people from different demographics and different age groups. And, some people are people that grew up poor, some are people that grew up rich. The only prerequisite for being in the school is I just want people to learn. I want to learn, right. Just not want to be told what to do. The idea of the school is for me to teach you how to develop a model that works for you. Because what works for the other guy might not work for you because you have different personalities. If you made Tom Brady a linebacker, he probably wouldn't have been that good.
Right.
He
No,
was meant to
definitely.
be a quarterback. So
And
I just want to show you how it doesn't need to be complex. So this is our newsletter here from 1023.
yeah, really quick here. I want to get the last question here.
Okay, sorry.
Jakram says what time are the classes taught? So it's Monday to Thursday, 7 to 9 a.m. Eastern, and then 12 to 1 p.m. Eastern. Mark does have live rooms that are open 24/7, and you can talk with the other members as well there. And Jess says, I'll be honest, joining was the best investment I've made. Jess, it's really good to see that. I'm really happy to see that kind of feedback from actual students. Mark, let's get back here to the oil trade because that
Well,
call.
thanks,
Yeah.
Jess. I'm not sure who Jess is because people don't have their real names in the chat. But thank you, Jess. If you tell me what your handle is, I'll recognize who you are. But thank you. I appreciate that. It makes me happy that I can teach people how to do things that are going to make their lives better. That's really, it's kind of like, one day I was out playing golf and I was thinking, I'm at a point in my life where I kind of need to give back. And what could be better than giving back is teaching people how to make money and solidify their retirement plans and their kids' education. But I just want to point out how simple these things can be. All right. So here we are back on 1023. This is a newsletter. So look at what I say here. It could set the stage for a move. XLE, the energy sector ETF, may be breaking out above the 8450 level. If it can clear this level, when resistance is cleared, tends to be a bullish sign because it shows that the sellers who created the resistance have left the market. So this is from 1023. Now let's look at the energy sector now. Now notice I said there will probably be resistance around 9250. It was the recent peak in June. This is the energy ETF, XLE. So now let's look at XLE.
Hey, really quick, Mark. I know I mentioned that we have a guy that from UPS. So he's on the YouTube chat. He's like, yo, I'm the UPS guy. And his handle is Paul Delivers. It's so funny.
Cool. Yeah, it's great, man. It's really cool having people from different industries because we can get insights that you just, you wouldn't get from other places. I mean, like, who knows better than what's going on in an industry? Some, Wall Street overpaid guru who works in their office, or a guy who's an actual UPS driver, like who's going to, or a FedEx driver, who's going to have a better sense of what's going on at one of those companies? It's the people that actually work there. So going back to this energy ETF here, look where we hit resistance, right around where we said we would. Okay, 9250. And it's not magic. I don't have a secret system. I just, good traders focus on what are the important price levels, and we let the market tell us what to do. A lot of times there's resistance at recent peaks. The recent peak was 9250. If we look at where the market turned around, like pretty much right there. So it doesn't need to be complicated. We keep it simple. If you understand the levels, the trends, the momentum, and have a concept of the investor psychology and how important it is, then that's the secret. Like, let me just bring up, I don't know, I'm just going to bring up a random stock. I just hit the letter K, Kellogg. All right. Now let's think about this in terms of psychology. Today, Kellogg was closed at 71. On November 3rd, it closed at 69. What has happened within those few days or the last week that's made the valuation of this company go up so much? And the answer is probably nothing, okay, other than investor perceptions. Psychology is what drives the market. When we're looking at a chart, you have to look at it in the context of what does it tell us about the supply and demand. I like to call myself a market equilibrium analyst. I don't like the term technical analyst. I would go by maybe market technician or, but I think what we try to do is equilibrium. Think about this. I'm going to give one of my analogies, and I love to give analogies, and some students like them, some students don't, but whatever. I do analogies. This is kind of what we do, right? Picture that this is the medieval ages. It's, I don't know, 1300, and we're out in Europe somewhere. And there's a little medieval market where the farmers come from all around to sell their goods, right? So just say that there's one road into the market and someone is up in the hills, they're spying on what's coming in. And they notice that, oh, gee, every day we typically get 10 carts of apples in, okay? That's the normal. We get 10 carts of apples. And then they notice on a particular day, oh, gee, today there's only one cart of apples. That means there's going to be a demand, then it's going to drive the price up. So they run back into the marketplace and they buy up all the apples they can. When people realize there are no apples around, they're willing to pay higher prices. And this person who might not know anything about apples or farming understands the concept of supply and demand, and they're able to make money off of it. And I like to think that that's what we do. So I just brought up this random stock, Kellogg, and we can see some of if you look at virtually any stock, you can see these principles in play here. So we have resistance becomes support, resistance becomes support. And this is a class. It's just how to identify these levels. Resistance here becomes support, support here, support here. We can see that there is resistance up here, how clear that is. So I just, I don't want to kick a dead horse to death, as they say, but what I want to emphasize is you don't really need to have like some secret super system. It's not a chess game. Trading is not a chess game. It can't be figured out with mathematics. If it could, all of these AI funds would be doing really well, and their performance actually is really bad for most of them, because we're dealing with psychology. Every trade you make, there's a human being on the other side of it that thinks you're wrong. If you're buying a stock, well, someone's selling it to you because they think you're wrong. They think it's going to go down. You think it's going to go up. So we see psychology. Resistance becomes support. This is seller's remorse. When we look at these charts, we need to look at them in the context of not tea leaves or astrology. We look in the context of what does it tell us about supply and demand. So we do have a class on patterns, right, where we cover some of the basic patterns. A lot of the patterns we don't really use, but we talk about ascending triangles, descending triangles. As a matter of fact, I think, was it natural gas I just looked at where I saw an ascending triangle? Let me see here. Nah, it must have been one of the other things we looked at. But if you don't need to remember, especially with candlestick charting, right? You don't really need to remember the names of everything. There was a time in my life, like, when I first got into this 20 years ago, 25 years ago, I read every book on technical analysis I could. I went to every lecture. I followed everyone on Wall Street because, I was in an institutional job, so I had research from everyone. I could have told you, if you look at this list, I could have told you what every single one of these things was. I just became obsessed with technical analysis. And now here we are 20 years later, and I realize it really just doesn't need to be that complicated. Some of the students have done really well on natural gas. And now let me talk about this for a second, because you might say, well, gee, Mark, I don't trade natural gas. I'm not a futures trader. So how does this apply to me? Well, a lot of our students have made a lot of money trading natural gas, but they're not trading the futures. They trade ETFs. There are ETFs that are designed to follow the price of natural gas. So when we were here, we talked about, oh, gee, there's a chance it could get up to 740. Actually, this is 7. So let me just change that to 7. There's a chance it could get up to 7. And guess what? It did. And why is 7 an important level? Well, it was resistance back here. So when this thing broke out, a lot of the students made money off it. Now there's an ETF, the symbol is UNG, that is designed to track natural gas. So if we watch the natural gas market and you don't trade futures, and I would imagine you don't, because most retail traders don't, you don't need to. You can just trade the ETF. A lot of the students also make a lot of money off of using these leveraged ETFs. For instance, if you think natural gas is going to go up, this ETF is designed to go up twice as much as natural gas. So say natural gas is up 2%, this will go up by roughly 4%. If you think natural gas is going to go down, you can buy this ETF, which if natural gas goes down, this will go up about twice as much as natural gas goes down. So we talk a lot about commodities in the markets because they're very important, but I want people to understand that you don't need to be a futures trader. One of the things about the class is learning about all the different ways that you can get exposure to different things. A lot of students are shocked that they could actually make money in a down market. And it could be something as simple as buying what's called an inverse ETF. So it doesn't need to be complicated. 50 years ago, if you wanted to make money if the market went down, you'd have to short something or you'd have to buy an option. Now you can just buy an inverse ETF just as easy as you can buy a stock. Like I know Rodrigo's made a killing on so this is the Qs, right? The NASDAQ 100, okay? Say this breaks out and is going to go higher and it's testing resistance. I think this I kind of think, well, we'll see over in the next few days. I mean, we could talk about the broader market in a few minutes. But just say this breaks out and you think it's going to go higher. Well, if you buy the TQQQ, this will go up about 3 times as much as the Qs will. Say you think that the Qs are going to go down and you're bearish. You can buy an ETF that will go up if the market goes down. And a lot of times it's easier to make money on the downside because markets move lower faster than they move up because people sell because of fear and they buy because of hope.
Right. So we've been talking about a lot of technicals. We've been talking about charts, analysis. Let's go ahead and move on to the market. Let's talk about the market. What's going on with the Federal Reserve, inflation? The CPI number came a little bit lower, but gas is still high. And this is just to give you guys a sense really of the type of discussions that are brought up in the school. It's not just technicals. There's a lot more. We go over acquisitions, a whole lot of stuff. It's really hard to just go over everything. But, and this is, keep in mind, we only have about like 30 minutes to an hour left here. So make sure that if you're going to join the school, do it while we're live because that's like that. It pretty much expires at midnight. So make sure that you get all the bonuses and all that stuff by joining live or before midnight.
Well, now, again, I don't like to predict the way the market's going to go. We let the market predict or tell us the way it's going to go. So today we broke an important level, this 390 level. This is the S&P. This is actually the spider. This is an ETF that tracks the S&P 500, which is the broadest market index. So we pretty much every day start off looking at this, and we look at oil, and we look at natural gas, and we look at the big stocks like Apple and Amazon. But I'm not so sure this move will hold because 7.7% inflation is still pretty darn high. And sometimes you get a delayed reaction, but you know what? I'm not going to guess. When markets move higher, one of the fundamentals or characteristics that we see is the levels that were resistance convert to support. So let's go back here to June. For the S&P or the spider, 390, and look at this. This goes actually all the way back to May. It was support back here. But it hit resistance, it broke the resistance, and after a few days, it looked like, well, it didn't look like, but the resistance turned into support. That's the sign that we're setting up for a new move higher, okay? Now, it happened here too. What was resistance became support. So over the next few days, if this, I mean, after a big move today, like 5.5%, there's going to be some people looking to take profits tomorrow. So I wouldn't be surprised if we come in, or maybe there's, more upside. But if we retest, meaning if it comes down and this level becomes support again, then we're probably going to keep moving up. But things go up slower than they go down. If over the next few days, this comes back down to 390 and the 390 level doesn't turn into support, then we're probably going to have a rapid move lower like we did here. And that's where you would buy one of those inverse ETFs if you're not an options trader. So I guess what I'm ultimately trying to say is that you let the market tell you what to do. The best traders let the market tell you what to do. They don't come in with some idea like, oh, today I'm going to buy Apple. Well, maybe today's the day to buy Apple, but you got to have a reason for it. As a matter of fact, Apple is one of the trades that recently was a really successful short for a lot of people, because I think, when we broke this important, when we failed at this important resistance up here, all right, it was when things don't get through resistance, they tend to turn around and sell off fast. Notice how buying things go up slower than they go down. So when something fails at resistance, just think about this. There's a lot of people, they're trading it back and forth. Pretend it's like the crowd from the old days, right? People in the crowd start to see, oh, gee, buyers are leaving the market. If I want to sell, I better reduce my price. And it becomes like this cascading effect. And it becomes this cascading effect, and the sellers each keep reducing their prices. So a bunch of the students I know either shorted this. Well, actually, I recommended people they don't short, but they buy puts. So a bunch of the students bought puts, and this came down. And where did it find support? I mean, at around a level that had been support before. So the ultimate thing, which I guess I'm trying to tell you, is that you have to let the market tell you what to do. You don't want to go in there with a preconceived notion. Like, for instance, I started off talking about the Dominion Energy, right? Where I thought that we would buy it at 66 and it would go up to 73. Well, guess what? I was wrong. The market is never wrong. The market broke its trend and it told us, hey, we're going to go down. So 66 to 69 in the course of a week is a pretty darn good return. It's a pretty darn good return. And if you're an options trader, it's a great return. So that's one of the main things I like to teach is let's let the market tell us what to do. So I know a bunch of the students that were day traders made a killing. Well, actually, I don't like that word, but made a big profit on Tesla yesterday because we saw that Tesla got up to this former support level, okay? And when things don't get back through resistance, so remember, support becomes resistance, they tend to sell. So we had some students that bought puts yesterday. I think I recommended buying the 190 puts, and the people that closed it out at the end of the day, I mean, the stock had gotten all the way down to 177. So listen, I'm no genius or anything like that. I'm not a market guru. I'm just a guy who works hard and has a lot of experience. And, I realize that there's just a lot of crazy myths about Wall Street. People think that it's really complex. And I mean, some of it is. I mean, there are literally, these AI funds hired scientists away from NASA to come up with these great AI strategies. And I think the average AI fund or, hedge fund that was driven by artificial intelligence was up about 9% last year. And the S&P was up about 29%. So it's not about math. It's about psychology. It's not a poker, or it's not a chess game. It's a poker game. What works today might not work tomorrow. But you look at any stock, look at that. Look how clear that is. As a matter of fact, when the school first started, this Tesla was one of the first, well, I don't know if it was one of the first, but it was pretty close to when the school started, to me, was an obvious sell. All right. And I'll tell you why. Now, this down here, okay, is what's called the relative strength index or relative strength indicator. This measures momentum. Momentum is how far a stock has moved from point A to point B in a certain time period. It's not the same as volatility. If something starts off at $10 and gets really nuts and 2 weeks later ends up at $10, well, the momentum will show as it being unchanged. But for some reason, this was the very end of the year. Well, actually, I know why, because people were pulling their money out of weak stocks and put it into things that were considered safe. There was this big spike up in Tesla. And I actually remember some people saying, do you think Tesla is going to go down? And I said, yes, I do. And they said, why? And now I would just want you to look at this. I'm going to make it red, this red line here. Okay. This RSI indicator is a simple indicator that we use. See how overbought it showed it is here, meaning it's well above its average trading range or typical trading range. We can scroll all the way back through the history of Tesla. All right. And here it got close, but not quite. This was literally the most overbought that this stock had ever been in its history. Okay. So to me, this was a pretty easy call to make. When a stock is the most overbought that it's been in its history, it's time to pay attention. And when you get a big, powerful move off of a bottom, off of a downtrend or something like this, that tends to be bullish. When you get these big, powerful moves at the end of a move higher, it tends to be bearish, because these are the people that were on the sidelines waiting and waiting and waiting to get a better price. And they finally say, you know what? I'm not going to wait anymore. I'm just going to pay. I just want in. I'm just going to buy at whatever price I can. So again, I don't have some super secret system. I don't, pretend to be a market guru. I don't have a crystal ball. But what I can do is teach you, or I'd like to think I can at least teach you how to make a style or a system that fits with what you like to do, right? Some people trade the Bollinger Bands. There's a lot of students who like to trade this, and this is actually kind of I'll just give you guys a little bit of a brief story. I know Rodrigo doesn't like it when I go on my rants, so we'll keep it short. But but there is this indicator that I discovered. Well, I didn't discover it, but I found it, and it's called the Fisher Transform Index, or Transform. Now, what's funny is that the reason why I saw this is because one day I was just I try to learn something new every day about the market, right? If I learn one thing every day, it's a successful day. So anyway, we came across this Fisher Transform Index, and I had seen a guy by the name of Mark Fisher speak, I don't know, 10, 15 years ago, and he was a really, great commodities trader. And I assumed that this was a thing that he came up with. So I started taking a look at it. And it turns out he has nothing to do with it. It was made by someone completely different. But a lot of the students have incorporated this into their trading. So let me just bring up, the signal is when the blue line crosses above the red line, it's a buy. When the blue line crosses below, it's a sell. So look how accurate this is. Buy here, sell here, buy here, sell here, buy here, sell here. So just by trading this simple, I guess this here probably would have been a break even, or maybe a little bit of a loss. But just by having this simple system here, a lot of students have incorporated this into their style or into what they use. So it's kind of like we all learn together. It's a class. It's not just me up there as a preacher telling people what to do. Some of our best trading ideas have actually come from students. Students will say, hey, this thing looks really overbought. This looks really oversold. What do you think? Yeah, Another thing I had never looked at before until one of our one of our students found it and started to use it, is this thing here called the Williams fractal, and this seems to be like a lot of crazy signals here, but let me just try to make this a little bit easier to look at, because the default setting is 2, but let's just, I don't know, just for the heck of it, let's just make the default setting 10. So basically the idea here is look how accurate this is. The idea is you sell when you get, I mean, this is actually, I got to change this because this is really annoying to me, because on Wall Street, the convention is if you're selling your red, and if you're buying.
But ultimately though, Mark, we don't want people to just put all their weight on a simple indicator. That's don't get the wrong idea, folks. Don't with that stuff. It's just another thing that can help you.
Yeah, it's what you need to do is everyone's got a different eye. Everyone's got a different style. And it might take a few weeks or a few months, but you'll come up with something that really works for you. Now, one of our students, I don't know if she's here tonight. I don't think she is, but she actually introduced me to this indicator. All right. Now look at how good this is. If you get a red triangle, you sell. If you get a green triangle, you buy. So sell, buy, sell, buy, sell, buy, sell, buy, sell. Here, if you wouldn't have gotten a buy signal, you would have gotten stopped out if you had a good stop out strategy. So you would have not maximized your profit, but you would have not left money on the table.
It makes, and we will go over like indicators when we show Benzinga Pro and all that stuff. But I want to stick to the markets right now, Mark. Where do you really see? I mean, we talked a little bit about inflation, the Fed, and all that stuff. But why is it important for new traders to understand like the overall market? Because it's not just a technical analysis class that you have. It's much more than that, right?
Yeah, because the market is ultimately never wrong. So if you listen to the gurus on TV and in your chat rooms or this or that, the odds are, they probably are wrong. I mean, I see even well-known commentators on TV. It's almost like they kind of regurgitate. Like one person says this and then everyone else kind of regurgitates it. But the idea here is for you to come up with a style, and I help students develop their own models. I mean, sometimes we can do, they can reach out to me on Twitter if they have questions. I'm at CMT or at Mark_.CMT. And that's the thing, like just pretend this indicator is a guitar, right? I mean, it's an instrument. Well, you got to figure out what style do you play? Are you a blues guitarist? Are you a rock guitarist? Are you a classical guitarist? Are you a flamenco guitarist? You have to use something that fits your personality and fits your style. And once you understand what fits your personality and what fits your style, and once you understand the importance that we teach in the class of the levels, the trends, and the momentum, and the investment psychology, I'm pretty confident you're going to be successful. This maybe sounds kind of counterintuitive to a lot of people, but as a trader, your job is not to be right. Your job is to make a model that works and stick to it. Remember, models aren't just having a bunch of cool looking things on your chart. A model is a set of rules. Okay, the rule, I will sell when we get a red arrow. I will buy when we get a green arrow. You got to take the guesswork out of it, right? And that's, no model is perfect, and every model is not going to work every time. That's why we have to concentrate on having our exit strategy and our trailing stop strategy. And then, just to kind of bring this back again to this Dominion, I was wrong, but we made money off of it. I thought that the stock was going to 73. All right. But I can be wrong. The market can't be wrong. The market's always right. So when the market broke this uptrend line, it said, all right, well, guess what? We're not getting to 73. It's time to sell now. So I think, Rodrigo, a lot of the students it's like an
Right.
epiphany that they realize it doesn't, there's so much misinformation out there, everything from people that are trying hard, but they're incompetent, to people that are downright frauds. Uh, it doesn't need to be that complicated. And I think a lot of students really kind of get it. It's not, we're not curing a virus here. We're not doing like, we're not like trying to come up with a cure for a virus. We're just looking at what the supply and demand dynamics are.
And all these things can get really blurry when, some people think that, oh, I need an indicator. Oh, I need somebody to tell me to, you don't need any of that. All you need is the right training, because Mark is able to do this without any indicators. He basically has his own way of doing it. And that's what we're here to teach you, right? We're not here to teach you how to use an indicator. We're not here to tell you to use an indicator. We're here to show you how you can trade. And basically, that's what Mark is going to show you, right? How you can use things that you can make on your own that you can figure out, right? Okay, this looks like an exit, and have a plan. Like you said, don't trade without a plan. But yeah, let's get here into it, Mark.
All right, well, let me just point out a trade that some of the students I know are in, and this is in oil. And I just want to tell you how you can make money when oil is going down. Now, if we go into a big recession, which I think we're going to, because, the narrative has been, well, there's a big job market. There's a lot of jobs out there, but look at all these companies that are announcing layoffs. I mean, I think that is kind of turned now. Facebook layoffs, Twitter layoffs, Goldman Sachs. Actually, I don't know about Goldman, but I saw some of the brokers were laying off people. But let's just take a look at this oil trade and just figure out a little bit of a way to make money. So where did oil find a top? At a recent top, at a resistance level. When things break through resistance, they tend to go, or when things don't break through resistance, they tend to go down because we get that sell and cascade effect. Now there is an ETF that is designed to go up if oil goes down. So on this day, Tuesday, we talked about, all right, oil is not going to make it through this level. It's probably going to go down. Now, I don't expect people to be derivative traders or options or futures traders, but this ETF, SCO, is designed to move in the opposite direction of oil. So some of the students got into this at around 21.66, and this is just 2 days ago, and now it's at 23.93. So that's a big move. Now, what is the stop out strategy and what is the target? Well, I would go back and look at oil, and I'll tell you exactly what the strategy and the target is. So if we break this downtrend line, that's our sign to sell SCO, and you walk away with a $3 profit in 2 days. Or if you're an options trader, you could conceivably make much more, right? So we're still kind of in a downtrend. And what would the target be for a profit? Well, I think that there's a good chance that it could get down to here. So our reason to get in was because we failed at resistance. Our target for a profit is if oil gets down to around 82, 83. Our stop out is if oil broke this downtrend. So it looks like oil now is breaking this downtrend. See how it's trading there? So with the SCO, if the downtrend in oil breaks, that's our sell signal. So now that the downtrend is broken, it's probably time to sell. So the people who bought it down around here are going to sell it up around here. So we're not guessing. We're letting the market tell us what to do. And if you let the market tell you what to do, and if you can get rid of all these preconceived ideas that you may have by watching all this garbage on, whatever chat room and all the Reddit traders and, blah, blah, blah. If you let the market tell you what to do, and if you focus on the fundamentals and the principles, that's where the profit comes from. Understanding investment psychology And I think one of the really cool things about trading is that it really kind of makes you develop your personality or yourself, right? Because being a good trader requires a lot of introspection. Like, am I panicking? Why am I selling? Like, my problem, well, when I was a trader, my problem was always taking my profits too soon. I never had an issue with getting out for a small loss because I know that there's, I've been doing this for 25 years. I know that there's always going to be a chance for something else. So I never had a problem with getting stopped out for a small loss. But because I'm a human being and I have emotions, just like everyone, I would tend to sell my stuff too early before it got to my target. So now that I've learned that about myself, I'm more conscious of it, that's one of my emotions. And you learn about things that we teach in the psychology class, like what's confirmation bias. You might think like, oh, it's time to buy XYZ. And confirmation bias might make you ignore things that will tell you XYZ is not going to go the way you think it's going to go. Confirmation bias works a lot in the real world too. Like, how many people have known friends that have dated or married the wrong person where all their friends knew, hey, this isn't a good fit, but because they each had confirmation bias, they ignored the signals that told them that maybe it wasn't going to be a good fit. Thinking about how to separate yourself from the herd mentality is something successful traders do. My favorite example of this is if you drive up to a toll booth and you see, there's 15 lanes and 10 of them are open, but there's the line of cars that are, 50 cars long trying to go through the same lane. So your natural instinct is, oh, gee, let me get on that line. The person that's your herd instinct. The person that can separate themselves from the herd and say, gee, that lane over there, there's no cars and it still has a green light. Let me go drive through there. And you cut ahead of all those cars and you go through, and then you look in the mirror and you see, everyone's starting to follow you. But the instinct of humans is to be part of the herd because there was safety in numbers. So by separating yourself and being able to think away from the herd of what most people are doing is a way to make money. But that goes to our investment psychology class. It's understanding that it's emotions that make you make bad decisions. So the two worst things a trader can do, and I'm just talking now about trading, I'm not talking about long-term investing. Again, you got to pick the style that fits your personality. The two worst things a trader can do is they hold on their losers for too long and they just become bigger and bigger and bigger, or they sell their winners too soon. And that goes back to fear. It's the fear of losing money. So the successful traders, the Steve Cohens of the world. Now, of course, I don't expect everyone to be Steve Cohen because he's one in a million, but he's also trading billions and billions of dollars. So he has to deal with all kinds of stuff and liquidity issues that retail traders don't. But they can have the difference is they have the emotional wherewithal to stick with their position. When I was at SAC, they literally had a full-time investment psychologist on staff. And I wasn't a portfolio manager there. I was just a trader. So I didn't talk to him. But if a portfolio manager was having a bad day or whatever, they got into a fight with their spouse or their kid was acting up and their mind wasn't in it, right, they would go talk to the psychologist. And, one of the things he would say is like, hey, if you're having problems in your life, if you're worried about your kids or your marriage or this or that, you're better off staying out of the market until you get your mind clear.
Hey, Mark, really quick here. I know you had mentioned something about a trade on Coin. Can you talk a little bit about that trade?
Yeah. All right. Well, first I'll bring up Bitcoin and just show you something here. So we have been talking a lot about how Bitcoin was at a very clear support level around 18,500. So I know a bunch of our students took short positions, once this support broke. So if crypto continues to fall apart, and my guess is it will. I mean, there's some pretty important news going on with the whole Binance and the FTX sale and so forth and so on, that Coinbase is probably going to go down. Okay. So I don't know why I lost all my lines. Darn it. Let's see if it's on here. COIN. All right. So here are my lines. Yeah. So this is a trading idea which is set up, but we don't have the trigger yet. Okay. This, I think, if it breaks this support around 46, it's probably going to go much lower. So I'm not saying get into it now. I'm saying let the market tell us what to do. There's a chance that this support holds and it goes higher. I don't think it will, but Coinbase, the stock, knows more about what it's going to do than I do. Notice how this 46 level has been such important support, and that's where we found support yesterday. All right. So what is support? Well, it's a large group of buyers that are all looking to pay around $46 for Coinbase. If the price trades below that, it's not just symbolic. What it does is it tells us that all those investors who are willing to pay 46 have left the market. They're either, maybe they finish their orders, maybe they cancel their orders. But in any market, whether it's a stock market, a housing market, commodities market, if you pull demand out of the market, it sets the stage for the price to go lower, because now sellers will have to offer their, in this case, shares at a discount. So Coinbase is on our trade watch list. And I would say the trade here is, it's at 46. Give yourself a little bit of room. If Coinbase gets below, I don't know, say 43.50, that'll probably be an indication that the buyers who created this support are out of the market. And once you pull all those buyers out of the market, the stage is set for the price to move lower. So we're not going to just guess that Coinbase is going down. We're going to see if Coinbase, if the action in it tells us that it's going to go down.
You're looking for a trigger, and that's something important that you teach in the classes. So folks, as we are getting closer and closer to the end of the session, make sure that if you do want to trade, and well, if you want to learn, more importantly, because learning is the main thing, with Mark Putrino, former hedge fund manager, use the link on the chat. That will give you all the bonuses that we talked about, the laptop, money back guarantee, everything in Benzinga Pro, all that stuff. So Mark, we have about probably like 10, 15 minutes here.
Why don't we take some questions? Okay. I can't see the chat, but
let's go ahead and
people are looking at.
Okay, so folks, throw in your questions if you have any questions that you would like Mark to answer. We're probably not going to get to all of them. Obviously, there's hundreds of people watching. But now, if you do want to get Mark's private individual attention, you do have the school. In the meantime, while we wait for some questions from the chat,
here's something I can tell people, which a lot of you retail traders are probably familiar with this whole Bed Bath and Beyond thing that went on when was it? Actually, it's been 2 months, right? So you probably are aware that there was all this talk that this guy who was the activist investor, his last name was Cohen, I think his first name was Richard, bought all these options that were way out of the money, like really high, and that all the market makers were going to have to go hedge their positions, and they were going to go buy Bed Bath and Beyond, and it was going to go much higher. Well, what happened? Forget all the news. Look what happened. Where did it find a top? At a former resistance level. So if you weren't listening to all that news, you would have said, gee, this is probably a good place to sell because it was a former resistance level. And I will tell you that if you're a typical, I don't want to say this in a derogatory way, but it seems like the typical retail investor has no idea what hedge funds really are and has no idea what market makers actually do for a living. Now, I was a market maker for 2 years. So I know what a market maker does. And I've overseen the trading of probably 12 to 15 different hedge funds. So I know what hedge funds do. And most of what people think is wrong. A lot of people have this big guy versus the small guy mentality. Who do hedge funds manage money for? Most of the time, it's pension plans. Who are involved in pension plans? It's the little guy. So this whole myth of like big guy versus little guy is really just a myth. It's just, what happened is like in GameStop and AMC, people lose a lot of money. So instead of saying, hey, I lost money because I listened to some idiot in some chat room, they want to go out and find like, oh, the hedge funds ran it down, or the algos ran it up, or it was, the market makers. So most of what you've heard is probably false. So that's something I like to do too, is to teach people how Wall Street really works and just expose some of the myth. And I ran into a friend of mine not too long ago who was a market maker at Goldman Sachs for 20 years. This dude is brilliant. Like, he literally designed part of the Goldman Sachs electronic trading system. And, we were like, oh, so what are you doing now? And I was telling him about my role and what people think about, what market makers do and what hedge funds do. And he's like, man, it's like, if these people came to work with me, he's like, after 2 hours, they would be so bored, they'd want to leave. But anyway, so we don't just talk about trading styles. We talk about how Wall Street really works. We talk about different vehicles you can use. For instance, there's the ETFs that you can take advantage of. If the market's going to go down, you can buy an ETF. You could trade commodities based on ETFs.
There's a ton that, folks are going to learn here if they join. All right. Jay Sant has an interesting question. Is crypto bound to crash, or is it eternal now?
My personal opinion, and again, I don't know. All I could say is this, me personally, I would not be invested in crypto now. I think that there's probably going to be a washout and there'll be some opportunities, but with what happened with his FTX and the Celsius, we're probably going to start seeing more of that. So me personally, I would not touch crypto. But now here's where I would get a sign. Let's go back to Bitcoin here. And we remember support turns into resistance. So look where Bitcoin got up to today, that's high trade, 18,150. And we got this around 18,500. So if this support turns into resistance, and as of today it has, it's probably going to start going lower. If over the next few days we bust back above here, maybe crypto gets another ride up. But me personally, I would not be invested in general in the crypto markets. Maybe if there's one specific one out there you like, it might be different. But there's going to be now. This is very typical of when things crash with like FTX. There's going to be lawsuits. It turns out, I don't know if it was FTX, but they were actually using their clients' money to make trades on their own. They're not letting people withdraw. So I just think that there's much better places to have your money allocated right now than crypto.
Right. No, yeah. There's a situation there with Voyager Capital, all these and it's so funny because it's like, they were like, hey, we're going to give you 12% a year. Give us all your money, trying to bring institutions in, right? And then suddenly, hey, we're going bankrupt. So, it's very, obviously we all know that's pretty unethical, right? But hey, you always have to be careful with crypto. And, somebody like Mark that's been around, these sort of meme stocks, which would be good to know. What are your thoughts on meme stock, Mark? Seems like there was a whole Reddit craze, right?
Well, I'll tell you this, and this is something that just comes from experience. There are so many Gabelli hired me in 1997. Believe it or not, it was on my birthday. So I remember exactly when he hired me. And that was, 1997. And then we went up into 2000 and we had the internet bubble. And there are just so many similarities between now and the internet bubble that it's just uncanny. There was this big move to day trading where, now people are Reddit traders from their home. But back then there were these day trading firms where people would just go to a firm. And I think there was a place called Daytech Online, and the day traders would go to the firm and they would actually sit on a trading desk and trade their money. And the idea was they could get ideas from the people that they're trading with and so forth and so on. And Daytech Online was a broker. They made money whether you're buying or selling. And I remember, I'm pretty sure it's them, but there was one quarter where not a single person in the traders made money, and the firm made like $30 million in commissions. So, just like now there was a bubble, like people have lived through the crypto bubble, right? That are listening to me right now. People have also lived through the cannabis bubble, right? Look at cannabis, and things like this happened in the internet bubble, right? Tilray hit $300 a share. Now it's trading at $389. And the question is not why is Tilray trading at $389? It's probably still overpriced in my opinion. The question is why did it get up to $300 in the first place? And this is kind of like what was going on in the internet bubble and what was going on in the Reddit stocks. And one of the reasons why we at the school started to get bearish back in November and December was because big parts of the market had crashed. A lot of the crypto stocks were literally down 90, 95%. The market goes down at different times. It doesn't just all go down at once. Back in the internet bubble, the internet stocks peaked in March of 2000. The bank stocks didn't peak until November. So different things go down at different times. So, it's not an unusual thing for when a bubble bursts for things to lose 90 or 80% of their value. So, I think that crypto was in a bubble. I think it's probably going to go lower. But those of you who've been trading for at least 5 or 6 years probably remember the whole cannabis craze. And, this stock never should have traded at $300 a share. It's a company that loses millions and millions of dollars. So, why was it worth $300 a share? Well, that brings us back to psychology. It wasn't being driven up by rational human beings doing due diligence. It was being driven up by someone saying, hey, I made money on this. And then they say, oh, my friend made money on this. I'm going to do it too. My friend made money. My friend made money. And they just guess. They just jump in and buy it without thinking. And hope is not a plan and guessing is not a plan. If you join this school, you're going to learn how to develop a common sense, simple strategy that fits your personality. And once you understand that, and once you understand how the risk management and psychology works, that's where the profits will come from. There are basically 3 stages of traders. First stage is, I want to make a lot of money. I need someone to tell me what to do. So people get into chat rooms and they listen to your chat room gurus. They lose money, so they go into the second stage. The second stage is, I'm going to come up with some really cool system or model. I'm going to, study this and that and read this book and read that book. And then that doesn't work and they lose money. Then they get to the third stage, and that's where they start making money. And that's when they realize it's not about all this crazy stuff. It's about simple principles, and it's about investment psychology, and it's about not making emotional decisions. If you have a plan and you take the guesswork out of it, it's not a guarantee, but it's going to stack the odds in your favor. Like a stock that's oversold and at support, the odds are much greater that that stock is going to go higher than a stock that's just neutral and not doing anything.
Right.
So if we go through the market and we let the market tell us what to do, that's where we find our profitable trading ideas.
And I want to show the people that are watching here really what is the trading school so they can kind of see it, right? So you have a dashboard, which is what you're looking at now. And it basically gives you the full tomorrow chart patterns. There's a live session Q&A, Tuesday investment psychology class.
Actually,
Wednesday,
chart patterns is Monday, or our Friday class
Monday.
is like our open class where we just talk about anything.
Right. Yeah. Today Today is Wednesday today. Well, today's Thursday.
Yeah,
Okay.
yeah. Today's Thursday.
So okay. All right. So today's Thursday, and you can yeah, all I know is that I'm working. That's it. So Friday, you have that one session, and that's Friday's a slow day, obviously, but like you still have Mark there. The schedule again, you already know 7 to 9 a.m. Eastern, and then 12 to 1 p.m. Eastern. Fridays, it's only 7 to 9. Um, but that is the dashboard. That's so you don't get lost. Like I got lost not knowing what day it is. Then you click it whenever the time comes to watch the class live with Mark. You just click on live and it's going to take you straight there. You can hide this chart and you can hide the chat if you don't want to talk with all the other great, amazing members that we have there. And you just want to look at the class, you could do that. If you want to just watch the recordings because maybe you have a full-time job and maybe you're not able to attend live, no problem. All the lessons are pretty much all posted in the video library. Okay. The other thing is the live chat. Okay. It's open 24/7. Mark is there pretty much the entire day, but it's open all day. It never closes. You have a bunch of different chat rooms here. Student chart of the day. You have a chat room called Questions for Mark. So if you're not able to attend the session live, you have a dedicated place where you can ask questions. And I know a lot of you guys want to ask Mark questions. It's just pretty much impossible for us to get to all 200 people here asking questions live and do this, right? So that's why you're able to get into the live room and ask that at any point. Master of the obvious. I believe this is comedy, right, Mark? This is for
Yeah, those are my satirical ways of teaching about history. But technical traders are really historians because we're really just trading stuff based on past levels. So I'm a history buff, like I said. All these,
but you need to know history. I think it was Paul Tudor Jones, and I mean Lee Cooperman. All these guys are like huge on history because like if you don't know the history, like you really, I mean the market's been open for hundreds of years, man, right? Like so that's all experience, and I guess that's why it's hard if you're new. But you even have quizzes here, Mark. Is that correct? You have quizzes for all the folks. So I mean, I think this is the full package, to be honest, folks. But
actually, that syllabus needs to be updated a little bit because what we did now is we combined our our trends momentum class, and now our class number 4 is option basics. So that's what today's lesson was. So I got to just tell the guys to update that. But this is just just a real quick look, our option basic lessons, why options. Actually, I'd have to share the screen. Is it okay if I share the screen?
Yeah, no, I just wanted to show them a little bit from the school and yeah. Damn, the Qs are up that much. Wow, the Qs went on a tear today, man.
Yeah, so just to show you, and again, I apologize that but we do a class and it's just option basics. The people that want to get more in depth and more in detail, they generally join my colleague Chris's class because he's on a much, like, he's way smarter than I am. He teaches pretty complicated stuff. But we just talk about basic calls and puts, what option contracts are. I think one of the best possible strategies that there is in the market is to look for things that are overbought or oversold and at our support and resistance, because they generally make, if something's overbought or oversold and it's at support or resistance, there's a good chance it's going to make a meaningful move imminently. It's either going to rebound or reverse, or it's going to break the level and keep going that same way. And I think that's a good time to deploy an option strategy. So a good amount of our traders or our students are options traders. So not everyone. I mean, we have some people that are more interested in learning how to read balance sheets and income statements. And we go over that too. Like this week, we went over the Funco. Someone wanted to look at the Funco earnings statement. And so we looked at Funco and we saw how it's not so Funco because their operating margins are decreasing by so much. So the class is based on technical analysis. And the first part of the class, the 2-hour class, we talk about whatever principle we're talking about that day. Like if it's the levels day, or if it's the patterns day. Then we actually take that learning and try to apply it practically to what's going on in the actual market. So this isn't like, I mean, I could have written a book and said, oh, back in last August, I was right about this and blah, blah, blah. This is like learning in real time. And then depending on what's going on a given day, we talk about different things. Like, obviously, we've been talking a lot about Tesla and Twitter with Elon Musk. We've obviously been talking a lot about, Facebook and how it's fallen apart. So it's, it's a class, but it's a discussion. It's a real class. It's not just me lecturing. It's interaction. And like I said before, I get some of the best ideas we've had have come from the students.
Right. No, absolutely, man. Kihan, it's a pleasure to be here finally. It's good to have you here, man. If you think this is funny and cool, check out the school, because Mark is completely unfiltered in the school. And for better or worse, I'm just kidding. But it's really important, guys, to really get things from a trader's perspective. Turn off the news, all that stuff, it has a spin. And as a trader, like, these news companies, they really don't care about the little guy. They don't care about you or me. They just care about their sponsors. And
their job is to entertain. It's not.
Yeah, that's what it is. And it's confusing when you're a new trader. You have no idea what's going on. You're like, yo, they said I should buy this. Let me go listen to Kramer, or whatever it is that they're pumping there. So, folks, ultimately, the only folks that care about the little guy is Benzinga. That's what we're all about. That's what I'm about. I am the little guy too. I'm a trader, and Mark Putrino recognizes that. The little guy for too long has gotten the short end of the stick. And it's about time that, Mark Putrino did something about this. And that's why he launched the trading school here, right?
Yeah, even a lot of these gurus, that I see, like, how many people, when the market was going down, this is January, this is the peak, said, oh, go to cash, go to cash, go to cash, go to cash. Well, if you think the market's going down, why would you go to cash? Why wouldn't you just buy an inverse ETF? So a lot of students end up being surprised that they can actually make money when the market's going down, even if they're not an options trader.
You're not allowed to say on CNBC and Bloomberg to short the market. So they're going to cut you off. You never seen when somebody's talking bad about the market and suddenly the signal drops? Like, we've all seen it. We all know what's up. But that's, I swear to God,
I'm proud to say I haven't watched Bloomberg in years. So,
well, it happens all the time, dude. But anyways, that's really why I do like the openness, Mark, because at the end of the day, we have to be transparent with our users. That we have an ethical responsibility to them to help them become better traders individually. I don't have a responsibility to Citadel or any multi-billion-dollar hedge fund. My responsibility of ethics here is for the individual person, right? The single mom, the single dad, the young person who's trying to make some extra income. Totally understandable. That's literally our thing here, right?
Yeah, I mean, I'm really committed to it. I mean, I'm 110% committed to my students, to the students that care, the students that want to learn. If someone just wants to show up for my, trade idea of the day and be told what to do, we don't want students like that in the class. We want people that genuinely want to learn. And it takes a little bit of work, but probably not as long of a period of time as you think. But I think just after, a month or two in the class, you're going to look at Wall Street and investing in a completely different way. I'm not sitting here saying, oh, I got some great magical system, and if you use it, you're guaranteed to make money. I use this moving average crossover system or this or that. We talk about all different kinds of styles, and you just got to come up with a style that fits your personality. Like, going back to my Tom Brady analogy, right? Tom Brady, greatest quarterback ever, blah, blah, blah.
Are you a Patriots fan here?
I am, actually. You don't.
I don't want to get into that. I don't want to get into
background there.
The deflate stuff. I mean, let's carry on here with the Brady stuff.
Well, you're in Florida, so you might be a Buccaneers fan. You see my Patriots helmet here. But the point is, all kidding aside, you got to do what fits your personality. If Tom Brady was a linebacker, he probably wouldn't have lasted too long. So that's why I kind of don't really like these, like, oh, watch how I trade or learn my style or learn my system. Because let's go back to our instrument analogy. Everyone who plays guitar is going to play them a little different. You got to play what your style is. I mean, if you're a blues guitar player and you try to play flamenco, it's not going to sound very good. If you're a flamenco guitarist and you try to play the blues, it's not going to sound very good. You have to do what fits your personality. And that's what I like to teach. If you learn these basic principles of levels, trends, momentum, and psychology, you're going to be able to come up with developing your own systems where you could come up with successful trading ideas. And you won't have to rely on anyone else. You're going to be able to do it by yourself. And, the day that, to me, a symbol of success is when someone says, hey, Mark, you've been a good teacher. So-and-so on CNBC was saying this, and I know they're wrong because of that. You know what I mean? So
Yeah, I mean, weren't they loving Kathy Wood and like that, and then they like totally opposite. It's just amazing. But at the end of the day, Mark, we all appreciate the work that you put into the school, the transparency, the real analytical skill that you bring into the markets, especially for new traders that are so confused. And it's just about focusing on what really matters, right? Like focus on what matters.
Yeah, I mean, there's so much stuff out there. There's so many newsletters. There's so many YouTube pages that, I mean, like I said, most of them range, but most of them aren't good. I mean, there's very few people I pay attention to. Like if Mario Gabelli's on CNBC, I'll watch him because he's going to say something smart. But, it goes from people that think they know what that they're doing, that are trying hard, but they just don't have the experience that someone like me does, down to downright frauds. And, I won't bring up any names, even though I probably could because it's all in the news. But a couple of the other, our competitors, other trading schools, have literally been fined millions of dollars by the FTC over the last few years for basically lying and making false promises. And, I'm never going to do that. Listen, I'm not going to be right all the time, but, I'm always going to give my students 110% and be honest and just try to teach them how to teach themselves. That's really the ultimate goal.
Right. Hard to tell them apart. Yep. I mean, Steve, look, I can tell you as a trader, dude, I've made mistakes too, going into pump and dump chat rooms and things like that. And coming with that experience, I try to always make an effort here to make this the best thing out there. Eightfinity, yeah, that's exactly right. But yeah, I mean, Mark knows this. I mean, Mark laughs probably about all these little marketers out there talking about this stuff. And you got to understand that the people on these marketers, these kids on YouTube, all they want is views. That's it. And when it comes to what we do here in the trading school, it's totally different. You have a former hedge fund manager that traded with multi-billionaire Steve Cohen and Mario Gabelli. You have to be able to differentiate both things. They're totally different. But that's why we're here, Mark. We're here pretty much to save the day, if you will, right? Help people from blowing up their accounts and listening to the wrong people, including the news. There are certain
news.
Like
that kind of, I mean, I'm a pretty, I think I'm an empathetic person. And, when I heard that story that one of our students said that they met someone that invested 20 grand and it got up to 200,000 and now they have nothing left because of the crypto markets, like that makes me feel bad. You know what I mean? It's like, if this person knew how to have a good stop out strategy, maybe they wouldn't have kept all 200 grand, but maybe they'd have 150 grand. And that could be meaningful. I mean, that could help someone pay for a house. That could help someone pay for their kid to get educated. So, I take a lot of pride in what I do because I know that it literally can change people's lives. And I'm not like some, preacher or guru or anything like that, but there's just so much information out there. And for some reason, people think that, like you could just show up with money and learn how to trade based on someone's chat room. Like, would you ever go to a doctor who never went to medical school and just got, you needed to have like your appendix out, and you go to some doctor who's like, oh, just going to ask on some chat room or Google, how do you operate on someone? I don't understand why, but for some reason, people
Right.
think that you could just show up and make money without having any kind of education. And that's just like anything that's worth knowing. It takes some time and it takes some effort, but
Yeah.
I don't think it takes as much time and as much effort as you might think it does. I think if you join the class, most students 2 or 3 months into it, their whole perspective on Wall Street has completely changed because they unlearned so many of the myths that they thought were true.
Right. And also the brokerages could care less if you make money or lose money. They're still getting paid. They churn your account. So, I mean, I kind of feel the little guy has always been forgotten. And that's why I'm really proud of the school. I'm really proud that we did this, Mark. It's been great, extremely successful. But we kind of went over time here. Before I move on here to talk about Pro a little bit and everything, can you give us some closing remarks here, not just on the markets, but also what you're going to be looking at in the trading school this week and next week for the members?
Well, I would say the one most important thing to watch for let me put it this way. Over the next, tomorrow's Friday, but I would say over the next week, we're probably going to get an idea of where the market's going to go over the next month. In other words, if this SPY holds above this 390 level, and if we see this resistance convert into support, like resistance converted into support here, that's going to set the stage for a trend higher. And then we're going to figure out what's the best bang for our buck. Where's the best place to allocate our money? If over the next few days, this reverses and 390 does not become support, then we're going to start to trend lower. I mean, that's my guess. But again, I'm not going to guess. I'm going to watch the market and let it tell me what to do. But if SPY stays above 390 for maybe 3 or 4 days, then there's a good chance that we have more of an uptrend. If SPY gets back down below 390, I think it's very possible that we see a fast sell-off like we saw here or we saw here, right? So that's the thing. Over the next few days, the market's going to kind of tell us, I think, where it's going to go over the next few months. So I guess my final remark is, let the market tell you what to do, develop a strategy that fits your personality, and understand how important the psychology is. Because if you're just going into some chat room and you're buying because someone says, oh, I bought this, that's impulsive. You're being compulsive and you're not using logic. That's emotion. So I think we've had a lot of renewals, people that signed up last year. So people really like the class, and I don't think that I think you should at least give it a try. I think you'll probably end up becoming a full-time student.
Right, and be part of the family. So everybody, big shout out, Mark Putrino.
Damn, son, where'd you find this?
All right, where we find this, Mark Putrino from the heavens of Wall Street. Thanks a lot for coming out here, helping the little guy. More importantly, launching this great school that everybody loves to be part of. And I'll see you tomorrow in the school, right? So
okay, all right, everybody. Well, thank you for joining us. And tomorrow's class is at 7 to 9. And again, Friday is kind of our Friday's fun day. We pretty much talk about everything. I don't know. I think last week we got into talk about ghosts and UFOs, but we generally try to keep it tied to the market. All right, everybody. Thanks a lot. Thanks a lot, Rodrigo. And I will see you tomorrow.
All right. All right. There you go. Mark Putrino. Guys, I'm only going to be here for a couple more minutes going over some questions. If you do have any questions as far as like the whole school, Jay Santana, Mark is cool. Rodrigo, thanks for the freebies. All right. All right. Oh, okay. So you're in Venezuela, Jay Santana. So I grew up in Nicaragua and I totally get what you mean. I totally get what you mean, dude. But you're always going to be part of this family. You joined the school, like, you're part of this family. Um, Keith says, Mark, thank you for your time presenting. I trade long, short, 1 to 120 days. So I'll take a look. Keith, you should take a look. Learning from somebody, SM Bashir, Jay Santana means like these sessions of by freebies. There's really no freebie. The freebie is like that we're here doing this for free, out of our time, right? Like, I've been working at this point for like 12 hours already, and I have like 4 more hours to go. So if that doesn't show you how committed I am myself to this, how Mark is committed to this, I don't know what else to do. But guess what? Maybe the 30-day money back guarantee shows you that, right? If it doesn't work out, you get all your money back. That's it. You move on. However, I think you're going to stay. You're going to like it, right? I mean, giving you 30 days, it's quite honestly, I don't even know where else you can get 30 days for anything, money back guarantee. So I'm getting a couple of questions here about where to sign up. The only way you can sign up is if you click the link on the chat. And if you sign up while we're live, or at least before midnight, you're going to have, you're going to be surprised, right? Because you're going to get everything we've been talking about, including Benzinga Pro, where you can look at all your charts. You have pre-market scanners, after-market scanners. These brokerages don't have any of that. Your watch list also do show pre-market and after-market activity. And I mean, if you really cannot scan the markets until 9:30 a.m., you're missing out on like 5 hours of trading. You're already late to the game if you don't know what's going on. If you don't know what's going on in your watch list because your brokerage doesn't show you that information, hey, I mean, remember, we're not a brokerage. We're pretty much like a trade idea platform where you can use this to get your trade ideas and education. The brokerage is only for you to make the trade. I would not use a brokerage for anything else except for that. They're old, antiquated. They have checking accounts, saving accounts. They don't really care much about like what you trade or don't trade because they make money either way if you win or lose. Now, when it comes to what we do, remember, like we're here to help you succeed. We don't care if you're shorting or going long on the markets, as long as you succeed and you increase your accuracy. And you're always going to have losers in trading. You're not going to win. You're not going to bat 100. We all know that, right? Whoever tells you that is lying. The ultimate place where you want to be is where you control your losses and then you control your winners. You don't let your winners turn into losses. You manage your risk properly, position sizing, not doing crazy option stuff that you don't even understand. Like buying calls way out of the money. If you know what I mean. So it's very important. Jay Santana, that really means a lot, Rodrigo. And yes, it's really remarkable. Yeah, I mean, you got my email, Jay Santana. Like we could talk. You guys can talk to me. Like I do this. This is my job. Like I don't just come here and do these shows for you guys. Like I have a real job here at Benzinga to talk with you guys and get a better understanding of, what would help you, what would help you become a better trader. We appreciate the feedback. This chat room, this school would not be anything without the members that we have there, which is probably the best community of members that we have out there. Born to Be, PDX. There's so many folks out there that really put in a lot of work, not just by giving us feedback on how to improve the school, but ultimately, folks, this is all Mark Putrino school. Okay, we call it whatever we want, but it's Mark Putrino at the end of the day, and his experience is unmatchable. Go find me somebody else that has traded with Steve Cohen and Mario Gabelli, people of that size. We're not talking, couple million. We're talking billions, not just 1 billion. We're talking, I think, Steve Cohen's is like above 30 billion. And I know that Mario Gabelli is at least $34 billion assets under management. And so yeah, that's pretty much how it goes. And I'm going to put a couple of links there for you guys so that you can, get in there. But basically, when you get to pro, there's a lot of different tools. Don't feel overwhelmed. There's a bunch of sessions to help you out. Kehin says from Nigeria, you guys are gold. Good to see you, man. I think you're my Nigerian friend. I have a lot of people from Nigeria that watch this, so it's good to see you guys. Let's see. All right, folks. So I'm going to put the link for you guys out there. And I'm going to put the contact. If you do want to reach out, you can send an email and we can go over any questions, things like that. But remember, this expires at midnight. Mark Douglas, that's a great book. Quantum. I will see you guys in the chat room. And let me just make sure I get everything here settled out. So again, don't feel overwhelmed with Pro. There's a lot of stuff, but then this is going to help you with your education 100%. The school has a live video library with all the recordings. And thank you everybody for being here in this session. We had a lot of fun. We talked about a lot of things with Mark. If you enjoyed it, I highly suggest to join the school. Big shout out for all you guys. Let's go ahead and give all you guys a round of applause. Let's go.
Damn, son, where'd you find this?
All right, all right. So thanks a lot, folks. I will see you in the school tomorrow. Jackie, good to see you. Have a good day, folks. Make sure you're there on the school. Try it out. 30 days to try it out. We'll see you guys tomorrow. Have a great day.